Good morning, Armor Insiders, and welcome to our morning meeting of our virtual hedge fund. I hope you guys had a good 3-day weekend and perhaps you enjoyed the inauguration. And let's dive into the Armor Investing Way 2025 strategy for investing and making money and protecting capital. That's what we do here on this desk. It's a virtual hedge fund desk. When I say that, what I'm hoping you take away from that thought is that you're a portfolio manager on the desk with me. CIO, portfolio manager. If this was a real hedge fund, you would have a tranche of capital allocated to you. You would be executing your strategy. If it's a virtual hedge fund, you bring the tranche of capital, whatever you're working with, and you're going to execute your strategy. It's a virtual hedge fund. So we're all going to collect information together. I'm going to share with you algorithmic information that's proprietary to help us know when to add risk, when to take risk off. We're going to share information about companies that we want to make and where we want to make investments that we think could be big stories over 2025 and beyond if we're lucky. But at the end of the day, you have to figure out your risk tolerance, your goal, and execute your strategy. Over time, you're going to realize you're the smart money. 2025 investing strategy, how to make money in stocks in 2025. Step one, we have a risk monitor. We monitor 10 indexes. When those 10 indexes all give the same algorithmic risk-on entry signal, that's when we want to put our capital to work. So step one, we came into this year, risk monitor red. That's great. Max cash. We were in max cash for about a month. Risk monitor went green last week on the 15th. Take a quick look here. Okay. Risk monitor went green last week. It's a pretty big green box there. So let's make it a little smaller. You can see, oh wait, we already have it smaller. Great. Okay. That green box is when the risk monitor went green. Okay. So what's the first thing we do? This is 2025 Armor Investing Way and beyond 2025. Simplify execution. Max cash. First thing we do is get long the S&P. We use triple the S&P to do it. If we get confirmation from all the indexes that are in our risk monitor, where we have proprietary algos calibrated for the volatility of each index, if they confirm the S&P move, then we fill out Armor Macro. So I've got 3 funds, 3 portfolios that I share with you. Armor Macro, Armor Innovative Growth, and Armor Turnarounds and Dividends. Those 3 portfolios make up my virtual hedge fund, right? I'm running my own personal capital. I manage money for individuals, high net worth individuals, right? Family office. That investing capital that I run, I split into those 3 categories. So the first thing we do when the risk monitor goes green, Armor Macro goes 100% max long indexes, giving us index exposure. And depending on how much you allocate to that strategy, you can have more than 1-to-1 index exposure. But at the very least, you're picking up index exposure from here. As a, beginning suggestion. I can't tell you how to run your money. I don't know you. I don't know your risk tolerance, your goal. You got to figure that out. But as a way to think about this, 1/3 of the capital goes into swing trading indexes using double and triple the index exposure to guarantee you're making some money as the market goes up. We do that immediately when the risk monitor goes green. Max invested, closest to the stop. You're gonna hear me say that over and over again. It's so important. Very hard thing to do. You got to shift gears in your mind. Most people, for some reason, maybe it's just the way we're built, we're herd animals, whatever. You'll find yourself more comfortable buying the market 2 weeks from now when it's hitting all-time new highs, and you'll be chasing after it because you're more comfortable because it's making new highs and everyone's excited on CNBC. When in reality, you should be more afraid when it's hitting new highs 2 weeks from now and the whole crowd's stampeding. And the time to be most aggressive right now, closest to the stop. Your risk versus reward is optimal. The market rolls over, breaks down this week. I'm going to go to max cash again. But I got aggressively long last week. So when the market gaps up this morning, which it is, I can sit back and do nothing but enjoy the ride. Let other people mark up our portfolio. Yeah, I know it's a very hard thing to do, to get aggressive the minute the risk monitor changes. I know it. But over time, the more you do it, you'll reprogram your mind from being cannon fodder to being the smart money. Anybody been on this desk for a long time knows me. There's no way we put money to work on a gap up Monday, gap up Tuesday to start the week. So the market's going to gap up today. And what do you think I'm going to be doing on the desk? Nothing. I'm going to be hanging out with you guys, doing research, having fun, counting my chips as they go up, as they stack. That's what I'm doing. While everybody else is coming back from a 3-day weekend and the inauguration, and they're chasing the market this morning. All those people who said, I don't want to buy it last week because there's an inauguration and maybe this will happen and maybe that'll happen. The minute you're making decisions on maybes of some world event or whatever, you've already lost. You cannot allow that noise to get in the way of your execution. Step 2 is begin building out our portfolio of innovative growth stocks. And our turnaround dividend portfolio, I like to add when the risk monitor goes green, but that portfolio follows its own path. Okay, so you'll see me add over time in that portfolio whenever I see an opportunity. But when the risk monitor goes green, I go to my whiteboard of turnarounds and dividend ideas, and I focus on adding what's right at that moment. Let's go over now the 2 highlighted stocks of the day and some of the ideas that we added to the portfolio last week. Let's just walk through the 2 highlighted stocks of the day, and then I'll share with you other positions we added. Okay, so what I want to go over is 2 chart patterns that are almost identical and are significant positions in the portfolio now. We're going to start with Google. Okay, this is one of my favorite chart patterns. And I'm not going to wax poetic with you guys right now on the fundamentals of Google. I've shared it in the Slack room. I shared it on the captain's log. armrAlgos, Silver Fox shared this information over the weekend. And so you can read through that on your own. This chart pattern, I'm going to share 2 stocks with you now that are highlighted stocks of the day. There's 2 chart patterns that are set up just like this, and it's a perfect entry point for this cycle. What I want you to see is obviously the cup. There's a cup right in here on Google. Stage 1 base, this is where it could be bought at the beginning of this move, stage 1, that green box. And now we have a high tight pennant and what is potentially a breakout. It has to get above 200 for it to get exciting. So I'm already long at, I don't know, 197 or something, or wherever this closed last week, 190, 192 or something like that. We're long. Breaks out above 200, it gets started. But the high tight pennant that leaves a gap behind and gets built when the risk monitor's red is very compelling. In other words, it's relative strength you're looking at. For a month, the market sold off and Google held and built a high tight pennant and never closed the gap. Those potentially are the chart patterns that lead to the biggest winners in the next cycle. Okay. So Google, and now take a look at Pure Storage. It's the same pattern. It's the same type of pattern. Gap up with earnings, tight wedge, gets into that green box there. It should take off. I bought it early. And I buy it early because the risk monitor goes green, and I go use our individual stock algo to tell me which of the names on my whiteboard are giving buy triggers along with the market. Pure Storage did. Google did. Everything in the portfolio now, last week, gave a risk on entry point using an armrAlgo. It's my final thought for you today. So Armor Report subscribers, you're on your own now the rest of the day. Got a question, throw it into the comment section of this video. I'm happy to answer it. Armor Insiders, 9:30, we're going to get started with our trading session. Let me go over what that trading session is about. It's not just day trading. Yes, we're going to carry trade the index. We do that every day. We look for opportunities. We have our playbook. We're going to do that. It's also for us to share research, listen to conference calls, manage our risk on the portfolio. I do updates at 11:30 and 3:30. So if you can't be in the desk all day, I get it. But you want to know what's happening to tweak the portfolio or your approach or your risk management approach, 11:30, 3:30. And if you can't make those times, hey guys, just direct message me. Hey, Brett, I got out of a meeting. I have 5 minutes. Can you give me some heads up on what you guys are up to? I'm happy to update you. I'll DM you. DM me, I'll DM you back. Okay? So Armor Insiders, I'll see you at 9:30. We'll get that day started. As always, guys, the privilege of an Armor Report subscriber, an Armor Insider, you can pick up the phone and talk to me. You know, just 561-575-6832. If you have a question, if you need a sounding board, I'm happy to do that for you. All right. Everybody have a wonderful trading session. And remember, at the end of the day, strive to be the smart money.